Hello and welcome to the January 2025 Wall Street Market Update. Let's get right into it. You know the team?
I'm Max, this is Victor, we got Josh.
And you know the rest of the team, so let's move on. Max, our underlying thesis.
All right, number one, 90% of the things you worry about never happen. Number two, we make observations, not predictions. Number three, the simplest explanation is usually the best one, which is also known as Occam's razor. And finally, number four, Economics 101, supply and demand applies to markets as well as most products.
You got it. So here we go. This is the market.
So how did the market do at the end of the year, Vic?
And I'm glad you asked. The end of the year. Year to date, the 1231. The Dow up 1261. For the year, the Standard & Poor's 2345. And finally, look at NASDAQ. NASDAQ was up how much?
Oh, let's call it 30%. Wow.
30%. Wow.
Great year.
Great year. So how are we starting out so far this year? Right now, as the close of business yesterday, the Dow is up, what are we up? About 5.5%.
Mm-hmm.
S&P has switched now. The S&P's been leading the Dow. We're up 3%. And by the way, the S&P is now over 6,000. And look at the NASDAQ, who led everything last year, up 30%. After being up 30% this year, the NASDAQ is now up how much?
2%.
2%. And we're going to talk about where it took it to hit in just a minute. Okay, Dow Jones Industrial Average. There's the chart of it. Charts are great because you don't need to be a rocket scientist to easily look at it. Is that trend down, sideways, or up? You have on the bottom.
Looks up.
It looks up to me. 200-day moving average makes a whole year. 50-day moving average is a quarter. You see the drop we had in January near the year end, and now you see the big run up. We got the same thing, not as exaggerated in the S&P 500. And finally, NASDAQ is running into some rocky times. We're going to talk about that. Okay, income and yields.
So where are the bonds at? And we'll see where those are at. So the 30-year bond is 4.79. Let's call it 4.8. The 10 years at 4.5, and the 3-year is at 4.265.
And I want you to realize, if you look at that point, a little bit ago, about 2 weeks ago, the 30-year was bumping into 5%.
So this is important. The current yield curve. A lot of people in the past were talking about how it's inverted. It's no longer inverted. And
what do you mean inverted? What's an inverted yield curve?
An inverted yield curve is when the higher end of the higher end of the curve, which are longer yields, are lower than shorter yields.
Yeah, look at that black line. In the black line, see the higher yield was near the short end, and it went down. That was inverted. And right now in blue, it's what?
Uninverted.
It's a regular yield curve. That's right. Yields are coming back to normal. So the 20s, we'll do this. We'll let you start with that.
All right, so the roaring 20s, what's happened since after 2019 and 2020? So we had the COVID pandemic that rocked global spread to led to lockdowns, shuttered businesses. Everybody got those checks that went out in the mail. Then in 2020 to 2021, massive fiscal stimulus. That's what I just talked about. Monetary stimulus. Then the rise of the meme stocks. I'm sure everybody remembers when GameStop was roaring through, and then you had the trader called Roaring Kitty. You had GameStop, AMC, and other companies soared, and they actually made a Netflix special on it. So
what is a meme stock?
A meme stock?
Yeah.
A meme stock is basically when social media gets a hold of it and it starts going flying. Day traders start talking about it and pushing it up.
Gotcha. All because of social media.
Social media, yeah.
Wow. Okay. All right. The next. Oh, okay.
Go ahead.
Oh, the crypto boom. We've now seen crypto's bumped into 100. I'm not sure where we are today. Are we under 100 or above again?
We're about at 100.
We're about at $100,000. You're seeing
for Bitcoin.
For Bitcoin, the most widely used cryptocurrency. We still have geopolitical tensions, as you know. They've now signed a peace treaty in Gaza that's working out. We're getting an exchange of hostages. Russia's still going on. They're being addressed on that. Inflation and interest rates. Inflation has now actually started to slow down. However, I've noted the last couple of days, eggs are over $9 a dozen.
That's a lot.
That's a lot. I'm telling you.
I just had eggs for breakfast.
I'm telling you, they need to crack that up. Okay, you do the crypto.
All right, crypto again. The collapse of major crypto projects in 2022 and 2023. The Biden administration was very harsh on crypto. The new administration is very friendly on crypto. So they were very harsh on cracking down on crypto. That happened in 2022, 2023. Then inflation continued in 2023 and 2024. We saw elevated grain, eggs,
coffee.
A lot of commodities went skyrocketing up
Right.
during that time. And then finally, Israel and regional tensions that heightened geopolitical tensions across the Middle East.
You know why I wouldn't want to live in California?
High gas prices.
Look at that, $8.05 a gallon for gas prices. Diesel was $9.
$9.20. Wow.
Oh my God, unbelievable.
And then everything went on fire.
Yeah, and then it all caught on fire. Did they use gas? Never mind. I can't make jokes on there. Ongoing recovery. You can do the recoveries.
All right. So ongoing recovery. Central banks were weighing rate cuts and maintaining high rates to curb inflation. We had a soft landing versus the recession debates. That continued into 2024. We had emerging technologies, and market opportunities. We talked that AI was the new big boom, and AI was the big crash yesterday.
Yeah, we're going to talk about
We'll talk
AI
about that in a
more
little bit.
To bring you up to date.
And then the election year volatility. The Trump administration was voted into office, and he's been in office for about
8 days.
8 days now. So that's where we're wrapped up right now in the roaring 20s.
Okay, so welcome to 2025. I want you to notice this picture was taken December 31st, 2024. Lightning hits the Freedom Tower, bringing in a new year, 2025. So we're saying goodbye to 2024. We had all those in the beginning of the year. You had a couple of, what do we have in there? Economic factors. Then we had the Fed moved rates up to 5.5. Then corporate earnings started to take off. During the summer, we had the Middle East, and then the Fed started to cut rates, and then finally the last quarter, the election.
But if you go back to all of that, Vic, in 2024, all that happened, what was the NASDAQ up?
29%. Call it 30%.
Yeah, and the S&P was up 23, and the Dow was up 12.5. That's a pretty good year with all of that market noise.
I was just going to say, with all of that, that was still an exceptional year. I'd love to have another 2024 for 2025. So, here is what our outlook for 2025 is. We are now in a new secular bull market. Actually, it started 2 years ago. We'll go into the average length of a bull market shortly. But we are in a confirmed secular bull market. Number two, we know the Federal Reserve is lowering interest rates. There's going to be debate about how many times they're going to lower this year. In December, they said they were going to lower how many times?
4.
Then we got into January. It went to
2.
And then now it's at
1.
So, are they going to lower rates? Yes. Do we have any idea at the rate that they're going to lower? No. And here is the issue. You have two competing factors. One is we have a very strong economy and a very strong job market. So if the Fed lowers interest rates, lowering interest rates can fuel inflation. Well, the whole reason rates went up was to stop inflation. So with a combination on one hand of a strong economy, which could be inflationary, the Fed is reluctant to move rates down too quick to reignite inflation. It's a difficult rope to walk, very definitely.
Seems like a tough job Jerome Powell has.
It's a very tough job. I'm not sure I'd like to be him. But no, I don't want to be him. But we also see this, the result, there is unquestionably declining inflationary pressures. Inflation is in fact slowing down. So, it was funny, for the last 2 years, everything was the recession that's coming next quarter, then the recession that's coming next quarter, then the recession that's coming next quarter. It was the most...
Never came.
It never came. And, this one we're going to spend a little time on. The biggest thing that has been a paradigm shift in the economy this year. In the 80s, we had the advent of the personal computer. IBM created the personal computer here in Boca Raton. In the 90s, we had the widespread use of the internet. Both of those were transformational. Today, we have the big change in artificial intelligence in technology coming on in just rapid speed. However, this last week, someone threw in a stone or a monkey wrench. What happened this last week that hit the AI community?
Within AI community, especially the big 800-pound gorilla in the room, NVIDIA. I'm sure you've all have heard of NVIDIA. This company by the name of DeepSeek came out, and they revolutionized AI with creating a very similar, if not better, platform than I'm sure most of you have heard of, ChatGPT. And they did it with 95% cheaper. They did it at they used only $5 million to create it versus hundreds of millions, if not billions, of what ChatGPT spent.
Now, here's the kicker. Those cost numbers are exceptional. It looks like it's great. Who is behind DeepSeek?
DeepSeek is owned by China.
China.
And did they always tell the truth?
Wait a minute, that's my line. Can you believe what China says?
No, not all the time. There are reports. They're notorious for lying, and there are reports out there that they've basically spent. They have the top chip from NVIDIA, the H100s, and they have 50,000 of them, and those cost $25,000 a chip.
Yep.
And for the math, that's about $1.5 billion they spent, not the $5 million that they're saying they spent.
Yep. So this week, do you remember the date that they actually announced DeepSeek? It was January 20th. What date was January 20th significance?
That was when Trump came in.
Oh, that was the inauguration day. So China is out there trying to mess with this whole thing.
And is that the same time TikTok got taken down?
Yes, it is, within a day. Here is the interesting thing. Many have called this DeepSeek our Sputnik moment. If you'll remember, the Russians got Sputnik into space before them. But what happened? We had a Sputnik moment. Kennedy came out and said, we're going to beat them to the moon, and it created an entire new drive behind us staying at the forefront of space. So, after DeepSeek came out, Trump has come out and said this may be our Sputnik moment. We just got slapped in the face by China, and we need to wake up. You saw he's made his Stargate announcement.
Yep.
That's the head of Oracle, SoftBank, and who's the third one? I forgot.
OpenAI.
They just got their face slapped by China. So now they need to get it up to speed.
And the other thing is, we're in narrow AI. Where we're trying to get to is AGI.
What's AGI? Adjusted gross income? No, okay.
Artificial general intelligence.
What's artificial general intelligence?
That is basically where you can. Artificial intelligence is hard to distinguish. Between a human and artificial intelligence, it's hard to distinguish. It can have emotion in it, but that's where artificial general intelligence is where we're trying to get to.
So AGI, artificial general intelligence, brings more emotion into the phenomena
and reasoning.
Yep. But the good thing about AGI, I think, is it imminent? Or is it time down the road?
Time down the road.
Yeah, so we're still working with AI. We need to take back our leadership, and we'll eventually evolve into AGI, which is the next level up. It is no doubt huge advances in technology we're all going to witness over the next 5 to 10 years. And then finally, you have an administration that is now pro-growth, pro-business, and anti-regulatory. Very similar to what you had in 1981-82 with Ronald Reagan coming in. The Fed was lowering interest rates. Many of you will remember 21.5% prime in 1980. Mortgages were 15%. And then we had a new administration. Fed lowered rates. Paul Volcker lowered rates. Reagan came in, and we then had an 18-year bull market where the Dow went from 900 to 11,000 up to the end of 1999 before the dot-com bubble. So we do think there's some very strong reason to be optimistic for 2025. Can we reproduce another 2024?
I think we can.
We can. It's going to be difficult, but it's the possibility there.
Mm-hmm.
Everything's in place. So that sort of gives you a little background. That gives you our outlook. And by the way, here's some of the areas that under Trump, what performed best?
Software, entertainment, healthcare. Those were the top 3 performers. The bottom were energy and equipment and oil and gas.
You know, it's interesting about energy because one of the things now is
Drill, baby, drill.
So the problem is they're going to drill, which means more oil. But let's just assume we talked about economics 101 in the beginning. What traditionally happens when the demand stays the same and the supply goes up?
Costs go down.
Costs go down and prices go down. So that's why the energy sector is under some pressure. And here you have in order the stocks that did. And by the way, if you see that chart up at the top, the strongest you can read across the line. What did the best?
Strongest was IT, and then financials and industrials.
And then
the top
consumer
3.
discretionary. And back at the end, energy and staples were the weakest of the group. So we know where we came from. We know what the outlook is. I think we're looking into very strong 2025, but there's going to be some bumps.
There's always bumps.
And so, you know, what's interesting, what is this chart here?
The mountains in the blue were bull markets, and the little valleys were bear markets. And how long do they last, Victor?
You know what? If I had to guess, I'd probably say the average bear or the declining market lasts 11 months. The average bull market,
6.5 years.
So we are likely in the beginning of a new bull market. We've got all the economics that are set up to make it strong. We have a pro-growth environment now coming out of Washington. And I think everything looks pretty positive.
I think everything looks positive, yeah.
Yeah, we're going to have some bumps, but remember the bumps are normal. All right, I guess that sort of sums it up.
That sums it up. We take the emotion and replace it with historical context. Because
And
why?
Why? Because those who fail to learn from history are doomed to repeat it. Yet those that do learn from history can prosper. Come prosper with us. Okay, that's it. You ready?
Yep.
So remember,
We're here looking out for you.
Thank you.
Enjoy.
All
Thank
right.
you.